Welcome everyone to my weekly market update. Here's where we look at the overall market conditions in terms of the S&P 500, the long-term big picture view, as well as the short-term view. Longer term more for investors, and everybody's an investor. If you've got a pension plan, you're an investor. Shorter term more for traders, because in either case we want to be aligned with the overall market conditions, have the wind in our sails. So first of all, let's look at the very big picture here, going back to 2009. Here's the bull market run that began way back in late 2009, and barring a couple of interruptions, it hasn't stopped. And just of late, as I've been commentating on, like a stuck record since last November, this thing has just been an upwards trend, and it just won't even correct. But let's see if we can. And again, when I do these aren't rehearsed. I'm just thinking aloud as I, talk you through my mental processes each week. See if we can find out what else might be going on out there. Here's the daily chart, the S&P 500. Let's just update this. And as of late, it had a little hiccup on Thursday, but I'm still not really seeing, just recovered straight away. Still not seeing much of a sign here. It's very healthy above its 50-day moving average there, and even like a little support level there around 2400-ish that's just hanging in there. So that's the S&P 500. I wonder if there's any clues elsewhere. Let's look at the Nasdaq, which has pretty much been held up by the big leaders right now, Facebook and Apple and so on. Not much. I mean, it's might be struggling a little bit there, but still nothing dramatic. Until it gets below or starts to really test this 200-day, we can't be looking at anything more than a correction now. But a correction is definitely due, and this is now the two most volatile months of the year. Let's see if we can see anything else going on. Let's look at the bonds, which is a safe haven. Is there any money moving there? Apparently not. If anything, money's been pulling out of there. Although we do have an interesting development here with the bonds, where we get what's called a golden cross here, with the 50-day cross is the 200-day. Supposedly a bullish signal for bonds, and bonds are supposed to be safe. So if there's interest in bonds, you might be saying the smart money is shifting into bonds, and it's actually quite common that when you get the signal, actually what happens initially is this little downwards thing like that. That as long as that stays above 200-day, then that actually could be on the cards for the bonds there. Let's look at that on the weekly chart. It's still a very contradictory chart, stuck in a downtrend there, so not much to derive from there. So short term, we have to say, as well as long term, that it's still in a bull market, which is surprising because the fundamental conditions are definitely not pointing that way. But the market, the actual price action of the stock market can be dislocated from the real economy for a very long time. 2007 things were coming apart. It wasn't until late 2008 the stock market actually started to reflect that, and that's really when the public start to know about it. So as of now, all I can say is it's in a bull market till proven otherwise. Short-term trend is up until proven otherwise, and I will speak to you next week.